So as you know, many home insurance companies have recently dropped customers and others have stopped selling coverage altogether. The combo created a statewide crisis.
Yeah, but today a Bay Area startup opened up for business and did an about face. It started selling new home insurance policies.
Consumer investigator Chmura is here, so I'm a little bit confused as why this company can do it when these gigantic insurance companies can't.
Yeah, they say they've got innovation on their side. The founders believe they have an advantage. And just like many other startups that have sprung to life in the San Francisco Bay Area, data and science are at the heart of this new home insurance carrier.
We insure for direct physical loss to property.
Insurance is complicated. Long, lawyerly contracts.
Ordinance or law, which means any ordinance or law.
And jargon by the ream.
Subrogation shall not impair the right of the mortgagee.
To the average policyholder, it's as complex as
ignition,
rocket science,
and a liftoff of Falcon 9.
Well, that's exactly what a new insurance company is bringing to California's insurance market. Some rocket science.
This will be a new way of buying insurance.
Dan Preston just co-founded Stand Insurance in San Francisco.
One half of the company is all really experienced insurance talent from some of the biggest insurance companies that you know. The other side of the company is built from scientists from SpaceX and Boeing.
Why rocket science? Preston says the insurance industry often sets rates and adds or drops policies in bulk, often by zip code. Well, instead, Preston says Stand is focusing on individual houses. It'll build a digital twin of your home, then use physics to simulate how it would withstand extreme weather and disasters.
We're basically borrowing from how you would build an aircraft or spacecraft. If we're successful, and we expect to be, we will demonstrate that the reduction in risk actually leads to a lower cost for us and thus for our customers.
Because it's only day one, we can't immediately compare Stand's rates to other carriers. It says it can offer policies where others can't or won't serve. That is a much needed option for California. And yet,
well, I don't love it.
Amy Bach leads United Policyholders, a San Francisco nonprofit that helps consumers navigate insurance issues. Bach agrees that homeowners desperately need more insurance choices. But some companies, like Stand, that are picking up dropped policies are actually partnered with an out-of-state or non-admitted insurance company.
The non-admitteds have been a safety valve, but they should not be allowed to replace the admitted carriers. That's not healthy for the consumer.
Bach noted that if an admitted California carrier goes belly up, a state fund will cover you up to $1 million. But you get zero from that fund if you're insured by a non-admitted out-of-state carrier that fails.
The only way to do this is to look at the insurance model.
If successful, Stand could apply to become admitted here. For now, it has a partner in Montana. And with Bay Area data science plus $30 million in backing, this team has designs on sending the insurance industry back to the drawing board.
Fundamental changes like this actually require starting from scratch.
well, if you are shopping for home insurance and come across a non-admitted carrier, they can also be called surplus lines, Amy at United Policyholder suggests asking for their financial rating. She recommends only B+ or better. Stand, by the way, told us it has an A-. We've been asking for you to share your insurance experience in this crisis. It's easy. Just snap the QR code on your screen right now to fill out our consumer complaint form online. Back to you, Audrey.